All right, how's it going, everyone? Welcome to another episode of Forward Thinking Founders, where we talk to founders about their companies, their visions for the future, and how the two collide. Today, I'm very excited to be talking to Adam Moelis, who is the co-founder, CEO of Yotta Savings. Welcome to the show. How's it going?
It's going well, Matt. How are you?
I'm doing pretty well. I'm surprisingly energized for 5 o'clock in the afternoon. I'm not complaining though, and I'm super stoked to be talking to you about Yotta. For people that don't
Thanks.
know what Yotta is, can you kind of just dive into on a high level like what you're working on?
Yeah, so Yotta is basically an app where it's a savings account. You save money, and instead of getting interest, you get tickets into weekly contests to win prizes. So it's similar to a lottery, but it's actually a sweepstakes. So for every $25 you save via the app, you connect an external bank account, save money. Every $25 gets you one ticket into contests. For each ticket, you pick 7 numbers, or they can be auto-picked for you. And then each week, 7 winning numbers are revealed, and you win prizes based on how many of those numbers you match. Does that make sense?
It makes sense. Definitely a lot of questions because it's such a unique concept. So to level set, I feel like I don't need to remind most of the audience, about, how banks usually, can you just, for like 10 seconds or 15 seconds, can you just remind the audience, like, how do banks usually work, with interest and stuff? And then I want to dive into, just start initially with the origin story. Why did you decide to punt that and try something new?
Yeah, so fundamentally, banks make money a variety of ways, but so say you save at like a Chase Bank, they use your deposits to make loans, and they earn interest rate on those loans, whether it's a credit card, whether it's a mortgage, different types of loans. So they pay you interest on your funds. They basically decide how much to pay you, and they're using those funds to earn, say, 3% to 4% on a loan. And so the less they can pay you, the better, the more profitable they are. So that's, banks can choose to pay you whatever they want, but they want to pay you as little as possible. Um, a lot of banks compete on interest rates. What ends up happening is the big banks like Chase, Wells Fargo, Bank of America, most people, when they open a checking account, it's like one of the stickiest products out there. So they'll have that checking account for like the rest of their lives, and they don't really shop around often. But these big banks, they spend a lot of money also on marketing and the retail footprint and things like that. So what you'll typically find is the bigger the bank, the less interest they pay their customers on their deposits. Um, so yeah.
So obviously that's a suboptimal system, of course, and you decided to do something different. So can you take me through the origin story, but I think actually more particularly like why this specific idea? How do you come across this solution to improve on the experience of banks?
Yeah, so I'll try to answer both of those questions. So the first on the origin story, it's actually funny. I had a friend of mine who moved to London a few years ago, and he was telling me about a program they have there. It's called premium bonds. Most people in the U.S. haven't heard of them, but it's literally the number one savings program in the entire UK. 33% of people deposit with them. It's like 23 million, Britons. Um, and so the way that program works, it's run by the government. The way it works is people save money, and then once a month, people win prizes. And the more you save, the more entries you get into these sort of contests. And he was telling me about it, and I've long been kind of a behavioral psychology nut. I love Richard Thaler, Nudge, Danny Kahneman, Thinking Fast and Slow, and I've always been really into personal finance. So I had the itch to do something entrepreneurial, and this concept really struck a chord with me, given those interests of mine. And so I just got into researching why this wasn't a thing in the U.S. And we can get into that as well. Um, and what was interesting to me about it was not only how big it was in the UK, and actually upon further research, it's massive in New Zealand as well, and some bunch of other countries. But also, there's a lot of evidence that shows that a savings account through a prize concept can help people save money, especially in financially vulnerable populations. So not only did it have a big like business opportunity, but I also felt it could actually help people. Um, and the reason why is the lottery statistics in the US are pretty staggering. So Americans spend $80 billion a year on lottery tickets. It's $640 per household on average. and yet you have 40% of Americans that can't come up with $400 in an emergency. And especially with like COVID and things happen. So having an emergency fund of more than $400 would be great for people. And so it's like, how can we use the psychology of the lottery to help people save? Because playing the lottery is just about the worst possible gamble you can make. I think the expected value, you're expected to lose like 60% of every dollar you put in. And so like, how can we use the psychology that drives people to play the lottery to instead save money?
Yeah, it's really interesting. I want to dive into now how it works. So, I mean, I guess in more detail. So, let's actually talk about me because I have a savings account. I'm not opposed to moving it, right? Like, so, is it if someone wanted to use Yotta and they already had $100 saved up, just as an example, could they just transfer that to Yotta and immediately get those raffle tickets? Or can you just talk a little bit about the logistics if someone was considering this as their bank, or as their solution? Like, how does that work?
Yeah. So what you would, who do you bank with, by the way, if you're comfortable sharing?
The specific one I'm talking about is Ally. That's my specifically my savings.
Yeah. So for example, you would download our mobile app, either iOS or Android, and in the onboarding flow, you get prompted to connect an external bank account through Plaid, which is Visa actually just bought them. It's a massive fintech company, so it's very secure. You connect your bank, and once your bank's connected, you in the app just choose how much you want to deposit. Let's call it 100 for this example, and you would deposit it. You get 4 tickets immediately, and you'd either pick your tickets or you'd auto pick them, and then you would check every night. So every night one number is released. So you pick 7 numbers for each ticket, and we kind of draw it out over the course of a week. So one winning number comes out on Monday nights, one on Tuesday, Wednesday, Thursday, Friday, Saturday, and the last one on Sunday. And so throughout the week, it kind of builds up some suspense. Every night, something to look forward to. Did any of your tickets match the winning number? And then on Sunday nights, the final number is drawn, and your winnings for the week or your lack thereof, you can either win or not win. Your winnings are determined. And even if you don't win with Yotta, we also pay a savings bonus, which you can think of as interest. So if you never win a prize, you still earn 20 basis points APY. So on an annualized basis, you earn 20 basis points no matter what. So even if you don't win a prize, your savings are still growing. Does that make sense?
Makes perfect sense. Just wanted one super quick clarification. For those that don't know, what's a basis point?
So basis point is 0.01%. So
Yeah, and when you're in startup land, it's just ubiquitous. But like outside of startups, I feel like it's like I feel like when you're in startups, you like I know I do this. I just assume some people understand concepts, but it's like no, startups is like a whole new
yeah,
world, you know?
yeah, totally. And I started my first year out of school was in finance. So it's another jargon in those two industries pretty much.
Yeah, for sure. So I'm actually like want to talk through the lens of just like me utilizing this because I think the way I think about it is how a lot of people would think about it because like the way I'm thinking about it is like great, I got a savings account, I got my money in it. Are you suggesting people move their savings to Yotta, or is it more of like a put some in Yotta and like diversify your saving? That's so do you think about it like diversifying your savings income, your yield versus your lottery? Do you think about it like that?
Not really. I guess it depends on the type of saver you are. I almost think about like personal finance more at a higher level. It's, how much do you have in a checking account? How much do you have in savings? How much are you have invested in the market? Um, I really haven't thought about it as diversifying your savings. I think there's two interesting reasons to use Yotta. One is there's a lot of people who, like I said, they might save their money in like a Chase Bank, which pays you 0.01% or 1 basis point on your money, which is incredibly low. There's online banks. You mentioned one, Ally. Marcus is another one. These online banks, because they don't have a big physical footprint, they can afford to pay you a lot more on your savings. But a lot of people, they don't think it's worth it just to earn, even though it, Marcus, for example, pays 1% on your savings. That's 100 times what Chase pays. But Chase has, they're not the biggest bank in the country, I think, or the top three at least. So why are so many people keeping their money in like these suboptimal accounts? And the reason is, um, like I said, it's kind of they're not really looking at what else is out there, but also if you're putting away like $1,000 maybe in a savings account, okay, I can get 1%. That's $10. Okay, maybe it's not worth the switching to a whole different account, and I got to give them my information and all this stuff. But what we're doing is basically saying, um, get better value on your savings from us, and we're incentivizing it through this like fun aspect where you save money and you get the chance to win. It's not just, oh, I'm gonna get $10. It's, oh, I'm gonna get, maybe on average I'm gonna get $10, but I have a chance to win. Like our grand prize, I should have mentioned earlier, it's a $10 million jackpot. And we have prizes, it starts at 10 cents and goes all the way up to 10 million. But if we can motivate people to, one, move their savings from a lower yielding account into a higher yielding account, that's better for them. And two, there's a lot of people who struggle to save. And so if we can motivate people to just save more because now it's fun, then we're doing our job for those people. And then there's other people who, they'll get the same value on average from us that they will at an Ally or a Marcus. Actually, right now we're actually a bit higher than them, and not only do you get the same value, but you get to have fun along the way. And we don't think anyone's really approached banking in that way.
I don't really know why, but I kind of compare you in some ways to HQ Trivia, not in the way that you think. HQ had this magical thing where, like, it's sometime every night, wherever your friends are like, yo, it's time, like, let's get together and do HQ. And, like, we might win money, but, like, it's not even about the money. It's, like, about almost the experience. And this, it almost feels similar. Like, let's say it's the same yield as Ally, even if it's, like, slightly less, right? Like, it's a memories that I can have. It's something fun. It's just something it's so new, which is cool. How do you come up with the prize amounts? And is it not the prize? Sorry, like the lotto winnings. And is it tied to the amount you have under management? This goes into realm that like I don't understand super well, which is just
Yeah.
like bank theory or whatever, bank finance models. But how do you like do you have a $10 million you could like give today? Like I'm assuming
Yeah.
not. So it's like how does that work?
Yeah. So the way we think about it, so we'll take a step back. When we were designing the product, we were trying to figure out like what makes the lottery so massive, and it's that people can win a life-changing amount of money, and they can have fun dreaming about what that might be like, and that kind of drives a lot of the excitement. Yes, the lottery has smaller prizes and people like winning that, but I think the reason people play is because there's like a life-changing amount that you could potentially win no matter how small the odds. um, so there's a bit of a chicken and egg problem, which is as a startup, yeah, we don't have $10 million to pay out. However, the odds of someone winning, a lottery when your user base is relatively small, a lottery like or a system like ours is so small that we basically pay an insurance company a premium, and if someone wins, they would pay out that jackpot. And it's kind of a way for us to solve the chicken and egg problem for now. At some point, we'll get a lot bigger, and hopefully we'll be able to self-fund big prizes. But that's how we're doing the $10 million jackpot. And so the rest of the prizes, the way we think about it is we think about how much assets under management we have. We think about what kind of yield we want to pay. So when I say yield, it's kind of like all in interest rate, right? So like just say for simplicity, you got $1 million in AUM and you want to pay 2% to people. So that's 2% annually. Okay, that's $20,000 annually you want to pay out in prizes. And then the only question is, okay, how should we skew it? Should one person win the entire 20,000? Should one person win 10 and a bunch and five people win the other 10, 2,000 to make it? So it's all about at the top level, how much can we pay in aggregate, kind of like an interest rate analogy, and then how do we want to skew it? Yeah, that's how we think about it.
It's so fascinating. I love fintech. Like the way, like there's something so simple, which is just money, money in, money out, like in a very, very, very basic level. But
Yep.
and it's like, it's kind of, I mean, this is probably my naivety coming in, but I feel like as a whole, like fintech is like it's kind of simple, but there's so many things you can do with it. And this is just an example of you're taking a model, you introduce something new to it, and then you got like a brand new type of experience for a potential bank or for a potential bankee, for a potential user.
Yep, exactly. I mean, if you think about it at its core, we're effectively a savings account that skews the interest payments in a different way than another savings account. We kind of gamify it, and we're kind of like a wrapper around a savings account that makes it exciting and fun and still high value to the consumer.
How do you spread the word about it? Like I'm like, or I guess I could ask that, or I could ask just like, what do you spend your time on during the day? I guess like it's such a new concept. I'm just how do you get it out? And how do people like what types of people use it? Is it the same types of people that would use a Chase, that would use an Ally? Is it like more people in tech? Like I don't know. Like I'm just fascinated by the innovation that you've created, and just want to know like how people come into contact with it.
Yeah, so to get the word out, we started initially by, no one's ever heard of us before. While we were building the product, we were running social media ads on Facebook and Instagram to a wait list page, and just collecting leads. And then once we launched, we onboarded people off of that wait list that had built up over the course of 4 months. And then we always wanted this product to grow by word of mouth, and when we were thinking about it, we wanted to design it in a way that would maximize that potential, so we wouldn't have to spend big marketing dollars. Um, so at first, we were buying social media ads and ads on like Reddit and some other kind of like strategically placed ads online just to get people into the app at first. And then what we found is we have a referral program where if you refer a friend and they make a deposit, you each get 100 tickets. And that has been very, very popular. So what we're seeing is almost all of our users right now are coming in from referrals, which is great. Um, and people are sharing the app. We've seen over the past week blog posts, spring up about us and that's where people find us and they refer friends. And so we're pretty pleased to see that a lot of the growth is coming from word of mouth, because not only is that cheaper for us in terms of acquiring users, but it also shows that people like the product.
Yeah, definitely. Yeah, it's a good strategy for sure, especially in the beginning. What would you say the big vision is 10 years from now, 20 years from now? What does this look like?
So big picture, we think of ourselves as a company that uh, will use behavioral psychology or psychological, behavioral psychology to help people make smarter financial decisions, or at least to make it easier for people to make smarter financial decisions. That's kind of our broader mission. Now, this first product is a savings product. We're trying to make it easier to save by making it fun to save. An analogy I always like to make with this initial concept is it's almost like exercising or eating healthy, where people if something is good for you in the long run but it's painful in the short run, people don't do as much of it, right? So it's why people eat pizza instead of broccoli, right? And so what we're trying to do is make it easier to save by making it fun in the short run, so that in the long run you get the same benefit. And so we're gonna expand our offering into different financial services, and we're always going to try and figure out what in different parts of banking, like throw out the traditional way it's been done. How can we help people spend more responsibly, make better borrowing decisions, get the right credit card, just like in all areas of personal finance? How can we use sort of behavioral psychology to help people make the right decisions for themselves, or the best long-term decision? And that's kind of our broader mission. Uh, Yep. That's what,
Well, I mean, man, if you when you make that happen, like holy smokes, like what a future we'll live in, right?
I hope
The last
so.
question. I mean, to make that happen, you'll need some help, right? Like you'll need users, you'll need employees, maybe more investors. How can the forward-thinking founders community help you make it happen? What's an ask that you might have for people listening that in a way that they can help?
Yeah, I mean, one would just be I'd love for everyone to check out the app and send me feedback that they have. I mean, we're always looking for good feedback on the product. So, you can email me at adam@withyotta.com. I'd love any feedback. And then two is, I would love to connect with any fintech founders and learn from each other and see what works, what doesn't, and hopefully we can all help each other build big companies.
All right. Well, thank you so much for coming on to the podcast and sharing your model with us and your company with us. I know I'll be playing with this probably tonight and probably putting some money in. So hopefully people that are listening can do the same. And if you do, let me know. We can like talk about what our numbers are. I don't know if that's, can you share like the numbers that you pick with other people, or is that
Yeah,
confidential?
no, you could share it. You can't. It's not shared in the app, but you could tell a friend
Yeah.
what you choose as your
Yeah.
numbers.
All right. Well, it's an open invitation. If anyone's listening and they end up doing this, shoot me a DM on Twitter, Matt_Sherman, and we can discuss our points or our numbers. And I'll beat you though, because I'm a good guesser. I'm just joking.
Yeah.
Cool. All right. Well, appreciate you coming onto the podcast. Really interesting stuff. And I look forward to watching this grow into something awesome and giant. It's already awesome, but awesome and giant. So appreciate you coming on, man. Best of luck making it
Yeah.
happen.
Thanks, Matt. Appreciate you having me, and good luck winning that 10 million.
I'm gonna do it one day.